Hi everybody, this is Gary Dean and this is our nightly video report for Tuesday, January 12th, 2016. So we saw the biggest gain of 2016 today, and that did not come without some kicking and screaming along the way, but I've been saying I'm expecting some kind of short covering rally to hit. Maybe it starts today. It really wasn't too convincing with the S&P being up 20 and then going down 4 and then back up again. But this is really the way that they form these types of bottoms, as they get everyone, on the side that the market's never going to go up, and then next thing you know it, they're pinning the bid and, everybody's covering. Will that happen? Who knows? It's the market. We can just take educated guesses. And there's a lot of reasons to believe, yes, it will happen. So let's get started. These blue circles, that is each time our momentum indicator has touched the lows here, where you can see my cursor right here. There's 1, here's 2, and we are now there. So each time we are there, this one we saw the S&P go from 1863 all the way up to 1993, and that was in a matter of some 4 days or something. That's the type of short covering move I'm talking about. It moves very fast. Now again, I'm not 100% sure it plays out exactly like this, but I'm just pointing out previous times that we have hit these levels. We've had some pretty good rallies. Now we have the moving averages that are crossing here. A lot of times, again, this is not my target, but they come up and they do a kiss of death back up here. Again, my target right now is somewhere right in that 1990 up to the 2042. Time-wise, could it happen this week? Absolutely. We've seen these crazier moves happen before. Is it likely? I don't know. I'm going to try to manage my trades, and if we get up somewhere up into this 1990, 1980 area, I'll be scaling out of the 93 calls and see where I'm at with my other ones. But in any case, these are, the previous times, and we've had some pretty good rallies. So let's move on to number 2. Some pretty nice bullish divergences. Notice the price oscillator, how it had these big dips, and then we had another one down here. Typically that doesn't, it's not an impulsive move. When you get this and then it continues down and you get another big one, it implies it could be some type of ABC move. And notice when we had it here, we had another spike, it erupt, and then back down again. But in any case, really, you can see, as far as price resistance, there's really nothing. If you just follow my cursor here, there's really not a whole lot of, if the bulls can push it through this 1954, they have the moving average at 1965. Above that, there's really nothing until we get up to this 1990 area. So the first obstacle is obviously going to be they're going to have to push it through today's highs, and they're going to have to hit this, get through the moving average that's at the 1965. Above that, it really should be a pretty quick move up to these levels here. And remember, we still have the open gap there. So plenty of room on the SMI to go bullish divergences. And again, the short-term target where we could find some some sellers stepping in, and it could be just an ABC move of an A that stops here, pulls back, and then we make another one. That's just an idea of how it could play out. But in any case, we have the bullish divergences. We're very overbought. We have even on the daily, we're at levels that we have not seen in a very, very long time, and each time we've seen very large bounces off of that. On a 15-minute chart, here's that wedge I was showing you. This is implying that, just from the pattern, that the target should be anywhere from the 1990 all the way up to the 2012. Now, again, we have that 1972 area right here. That's a moving average. That's going to be where sellers would normally step in, and if it breaks above it, that's when you start seeing some people squeeze, because this is just a natural stop for a lot of people. Now, we could be just trading within this channel where it's an ABC, and that may end up coming up to this level here, and then maybe we get a pull back and up. I still think that there's a lot of room to go to get up here before we get into the overbought levels. But you can see if we take out these highs here and say come up somewhere up into this 1972 area, most likely we're going to get some bearish divergences. So that would imply that we're going to get a pullback. And as long as they can hold this support area here, I would then think that the next move is coming someplace up into these levels. And like I said, they can go very, very fast. So if we take a look at the 5-minute chart, this was the big rally at the open. We came back, didn't quite retrace 78% in between the two. So this is, let's just say, the new line in the sand right here. You want to see the bulls hold it above this line here, and we may be, honestly, we may be making some kind of triangle. That may be the pattern in play, where we come up, down, and then back up again. Or it just takes it out one way, or, we have to just wait and see. But we know that the 1947 is resistance. If they get through that, then we're keeping an eye on this 1960 and then the 1972. These are going to be the levels where sellers are going to come. If they get through this, this is the last line in the sand, say, for the 15-minute chart as far as a moving average. And if we go to a 60, if they get above this, really the next one is going all the way up into the 2031, and that's just a moving average. So that would leave the door open for 1990. So, like I said, this market, it's not strong at all. Can we get a short covering squeeze and see this thing up 50 points, another 50 points by the end of the week? Absolutely. Is it a sure thing? Absolutely not. But, there's a lot of reasons to believe that it could take place. So let's see what plays out tomorrow, and have a great night.